So crowdfunding is a way to let the tribe or community of people decide if whatever it is you're proposing makes sense. So it's sort of economically voting on a deal or an opportunity or whatever it is that you're offering to the crowd.
Welcome to Masterclass Talks, brought to you by Masterclass Crowdfunding.com. It is my pleasure today to introduce to you our special guest. After graduating with a degree in computer science, JohnCorey started out his business life working for Hewlett-Packard in the Silicon Valley. He was then headhunted to work for Next Computers, the company that Steve Jobs went to after leaving Apple. John then moved to London after being offered a job by the Swiss Bank Corporation. John has over 30 years of experience with creative finance as it applies to real estate. He purchased his first buy-to-let property in 1983 and now owns properties around the world in 11 different time zones. John now runs PropertyFortress.com, which provides people with the knowledge, skills and tools to improve their financial profile through property acquisition. With his deep technology background and executive management experience at international firms, John is perfectly based to understand the potential of real estate crowdfunding, and he has become an authority in this exciting emerging market, regularly speaking at events and panels throughout the UK. So, John, welcome to Masterclass. Absolutely delighted to have you here, my friend. So how was London this morning?
It was good. Easy trip out.
Plenty of tube delays, I'm sure, is normal in the capital city?
There was definitely a few delays, yes.
Good. So, judging by your accent, you're not a native of London. So where were you born? Tell me a little bit about your background.
Okay, so I grew up in the US and the accent is from Massachusetts. Some people would say it's a Bostonian accent. After I finished my degree in computer science, 22, I moved to Silicon Valley out in California and was there a number of years and later progressed into Oregon and then over to London in 94, I think it was.
Good. So you're almost a native now of London. You've been here almost long enough.
Well, with this Brexit thing, we'll see.
That's a topic for another day,
exactly.
For sure. So what took you into the route of computer science?
So I was originally a mechanical engineer, and I didn't like the physical reality that you had to deal with as a mechanical engineer. And by moving into computer science, you could sort of have an unlimited scope. There was no physical reality. It was whatever the computer could do, and therefore whatever you could program it to do. Okay. So, and I really liked the lack of reality in that you could stretch your thoughts.
Okay. So I'm sure the decision to move to London was a big one to make. So what prompted that, and what was the opportunity that brought you to the United Kingdom?
Well, from Silicon Valley, I worked at Hewlett-Packard originally. One of the people who wrote the Unix standard for HP. I was paid to be online, 1982. So yes, the hair color is natural. But after I went to Next Computer, which is after HP, that was where Steve Jobs created a company after leaving Apple.
Yes.
And I ended up actually working directly for him for about a year. So Steve was my
directly
boss.
to Steve?
Boss. Sort of like you and I, only not quite as friendly sometimes.
Okay, that must have been a fabulous experience.
It was, and at the time too, Steve was quite known in the Valley, but he wasn't like a global phenomenon.
Okay.
So it was a different period, so to speak. Computer science and computers weren't a global phenomenon. There was no web. They hadn't been invented yet. In fact, the Next Computer is why we have a web. And I could tell you that story at some point, but literally the first web server is a Next Computer. So because of my Next experience, one of the biggest customers for Next was Swiss Bank Corporation. Their headquarters in London were looking for people. They went to the US to recruit, and I was one of the people they recruited. So I moved from Silicon Valley to London.
Okay, very good. So in terms of property then, I know that you do a lot in property investment. You've got a global investment portfolio, 11 different time zones. So what took you into property? What did you see in that arena that attracted you into it?
When I had graduated with my degree, I suddenly had this ability to read books I wanted to read. So I used to go to the bookstore a lot. And one of the things was a book called Nothing Down. It was on property. It got me interested. Eventually I took a course from the same sort of people and did my first property investment in San Jose, California. And there were a few people in the Valley that sort of did the same thing. essentially we're engineers, we like problem solving, we like working out numbers and coming up with puzzles and solutions. And property investing is a creative activity, and it sort of plays to that strength. And it seemed like a good way also to generate some tax benefits.
Okay. Now, in the time I've known you, I know you're passionate about helping other people, educating people in property, keeping up to date with trends and things that are happening in the industry. So the company that you run, the propertyfortress.com, tell me a little bit about that and what you sort of are trying to achieve with that company.
So I set it up a number of years ago, and there's a few aspects to it. One of them is Property Fortress education, because I am passionate about teaching or sharing, and partially because the more you share, the better you get at what you do.
True,
You
very
have
true.
to deepen your knowledge if you're trying to explain it to someone else, and you have to see it through their eyes, which keeps you sort of nimble. So it's investment opportunities, it's crowdfunding, some of those opportunities, it's education, and there's a whole sort of mix of things, but they're all consistently focused on real estate and how to grow wealth through real estate.
Okay, so crowdfunding as an industry is still quite new. In one sentence, and I ask all the interviewees this, and it's interesting the different answers you receive, but in one sentence, what is crowdfunding?
So crowdfunding is a way to let the tribe or community of people decide if whatever it is you're proposing makes sense. So it's sort of economically voting on a deal or an opportunity or whatever it is that you're offering to the crowd.
And we both know, of course, that the industry has exploded in the last 7-8 years. What are the main reasons for that, do you think? Just pick out 2 or 3 of why the industry has just exploded.
Well, if you go back in time, Indiegogo, I think, was the first crowdfunding site anywhere, and they've been around quite a while. And it's a momentum thing that as people get experience with it, as more campaigns happen on Kickstarter and these other platforms, it starts to be in the consciousness. More recently in the US, also in the UK, particularly in the UK on a leadership point of view, the regulators have opened up the opportunity for crowdfunding to be released to the public and for a profit, so that you can actually, instead of just buying a watch or something or buying tickets for a concert, you're literally investing in an opportunity with the assumption you're going to get a financial gain, a debt or equity investment.
So within the world of real estate crowdfunding, and that's what I really want to get into today, to sort of peel back the layers a little bit on real estate crowdfunding. So it is certainly probably the fastest growing sector within crowdfunding. There's of course the reward base, there's the donation charity base, there's then the equity, and then within that the real estate as well as lending. So within real estate, what are the main trends at the minute, or do you want to even start by defining the different types of real estate crowdfunding?
Okay.
That might be a good place to start.
Well, let me step it back a little more. So real estate classically is an opportunity to put together a deal. Maybe you develop a building, or maybe you're just holding it for long term or whatever. And in most transactions, there's an element of debt and an element of equity. And what classically happens with real estate investors is they run out of the equity before they run out of deals. So they can find more deals, and the banks are still generally quite willing to lend on the debt side if you have enough equity. Well, classically, an investor will run out of cash. So how do they bring in more cash from someone else? So they partner or they joint venture. Crowdfunding is a legitimate, legal, compliant way that you can attract more equity to your deals. Now, crowdfunding, you can also raise money through debt crowdfunding or through equity crowdfunding. Both are possible. But as I'm saying here, a lot of the really good property investors, they will run out of equity before they run out of debt providers. So this is an opportunity to do more and more deals rather than shutting down the leads.
Okay. Now you mentioned an interesting word there, compliant, and that leads us down the obvious avenue of regulation. And of course, real estate crowdfunding, as all equity lending crowdfunding, is regulated in the UK here, the Financial Conduct Authority. So I hear different discussions when I talk to different people within the industry, some very positive about the regulation aspect, and others very critical of some of the what they see as hindering them doing their business. So is regulation positive or negative in your estimation?
So I think the people who see it as a negative are naive or corrupt. It's as simple as that.
Mm-hmm.
So the regulators just want to create a fair and open playing field. They're basically saying we regulate and have for quite a long time financial promotions. The US would be SEC, the UK would be FCA. So the Financial Conduct Authority sets down the rules for all financial promotions, as particularly anything going to the retail public, the restricted retail public, which is they should only be offered things that they can understand and are relatively vanilla. So the FCA has been rather progressive. They're basically taking the view that, well, let's try this crowdfunding out. Let's open it up to the retail investors. We'll put in some restrictions so that people don't burn themselves too badly if they don't make good choices. And what crowdfunding allows you to do is actually to conduct legal financial promotions. Telling people about your deals is a financial promotion. If your intent is to raise money, and particularly if your intent is to raise money from more than one person, that is a regulated activity whether you know it or not. And a lot of the property people, the people who aren't maybe quite as sophisticated, have come from a mindset of you put down your own deposit out of your own savings, you get a loan, you buy the property. The FCA doesn't regulate any of that really, other than maybe the loan on your primary residence. But largely, you don't even have to worry about the FCA. It's when you start doing financial promotions that you're crossing the line. And this is the point where people don't understand. So the people who have come from the point of view of, well, I never had to worry about this before, it's like, well, it's true, because you've never tried it before. It's like saying that the rules for flying a plane don't apply when you drive, but now that you're behind in the cockpit behind the controls,
It's a
there are
different
new
world.
rules.
Different
It's a
world.
different game.
Yeah.
So I think it's actually great because it makes it transparent. It makes it clear what the rules are. It gives the structure some order, and it allows me to fund a deal with multiple investors. So I don't have to depend on one investor.
But is not a danger that potentially they'll set the barrier so high on some of the activities that it just becomes not lucrative or just too difficult to do and people just won't do it?
That's possible, but the alternative right now is you're not allowed to do it, period. They're saying here's the door open.
Well, unless they tighten the current
Yeah.
set of regulations.
That just means they're changing how much the door's open versus no door. So I think the FCA's probably going to change things as they get feedback from the market, and they will adjust because their job is to protect consumers from themselves.
Yeah.
But at the same time, when it works, they don't have any need to create more rules to stop saying that's working. This is actually a good thing for housing in the UK. It's a way of funding more housing. It's a way of funding more developments and more investors or more sort of people who do construction. So on some level, it's actually quite a democratic thing. It also means the generation rent folks, the people who grumble that their savings isn't keeping up, they could look at crowdfunding as a way of helping their savings grow at the same rate of speed as housing. So when they eventually want to buy their own house, their savings is kept up.
Yeah. I mean, there'll always be change in any industry.
Yes.
So that's just a given, I suppose, in business. And the way I see it is you've got, first of all, the changes that may come, and then it's a different discussion whether those changes are positive or negative, potentially. But I hear what you're saying, that any change that still allows you to do business in a regulated way is obviously positive in the round.
I come from Silicon Valley, as we said earlier. That's a marketplace that every 12, 18, 24 months things change.
Yeah.
And you never quite see where it's coming from, then boom, it hits you.
Yeah.
So you have to be nimble. You just have to deal with it. But this is not a bad thing that change is happening.
Yeah. There's also an element of survival of the fittest, that when a change happens,
Correct.
some platforms mightn't be able to adapt themselves and sort of remorph themselves into what's
Correct.
necessary to survive. So some platforms may drop off as new platforms come on, but the fittest will adapt, survive, and obviously go on to be successful.
There's a couple of points to that. So the way you say the fittest is you experiment, you take classes, or you educate yourself somehow. If there aren't any sort of classes already, then you just get out there in the market and you do minimum viable product type tests. So quite small tests that you can learn from and you iterate. And yes, that's, in a sense, my background in Silicon Valley is complementary to this type of activity where it's about try things now, see how they work, move forward, adjust. Okay, that didn't quite work right, we'll try it this way. But doing it in an open, fair, transparent way, you're building your brand, people will give you credit for trying and innovating and adjusting.
Yeah. Now, we're both involved in the property game for many years, and there are some people in the world of property that we refer to often as cowboys. certainly are not scrupulous.
That's the polite version, yes.
And that's the polite version, correct. When you marry that with the fact that real estate crowdfunding is quite a new industry, what would your comments be on that, or what should investors look out for when they're coming to look at this type of a marketplace?
So there are dodgy operators, and there are dodgy deals that get done, and some of those blow up badly. One of the reasons that happens is because people have to find out about deals sort of through backroom chats in a pub, whatever, where it's not an open marketplace. So crowdfunding's throwing open the marketplace. And if everybody sort of knows to go to the respective sites, however many there are, and they can see a variety of deals, the people who are putting in the money can pick, and they can do due diligence, and they know that there's a sort of standard disclosure process, that the regulators have said, these types of documents have to be released to everybody at the same time. The offer is, everybody's going to get the same offer, whether it's a loan agreement or whether it's shareholding in a company, so equity, they're going to have the same offer. So everybody can see the same thing. Also, say you and I were looking at a deal, and you have a particular background and I have a slightly different background. You might spot something that I don't. So you spot it, you maybe make a question or a comment, it's a good point. And then, so we have more eyeballs on the deal. We have more eyeballs on the paperwork. More people are into the information.
So collectively you arrive at a decision that this is a good deal or a bad deal.
We should be able to come to a better decision. The wisdom of crowds.
Yeah, okay. Yeah, that's a very positive thing. Let's bring it right down to brass tacks. So I'm a property developer, or I have a property project, and I'm considering real estate crowdfunding as a route to bring in some funds for my project. What and why should I do that? What's the attraction for me? How would you sell that to me as a developer?
So first is do it before you need to.
Okay.
So don't wait till you have a project that's short of funding. Fund some early projects. You want to be building your tribe early. You want to have some short, quick wins. If you can do that, take a look at your project, and can you divide it into phases? Can you fund just the planning, or the first phase construction, or the second phase? The faster you can turn that money around in getting positive feedback, the sooner those investors get their money back with a profit, the more likely A, they'll say, can we do this again? Only I want to put more money in. And B, I'm going to tell my friends, my cousin, my whatever. The word starts to spread that, hey, I made some money with these guys. These guys are okay. Take a look at this deal. So you want to build your tribe, and you want to iterate your way forward. It's building your brand. And you can raise debt, you can raise equity, you can do both. It doesn't really matter. The point is you want to be building momentum, getting the brand out there, track record for delivery. You say what you want to do, and then you deliver it on it. So then people say, this is what he's saying the next time. The last 5 deals, that's what they said. Makes sense. This, I'm in.
So you're building that credibility with the tribe.
Yeah.
I mean, I've met this last 5-6 years, particularly after the credit crunch, a lot of developers who have perhaps land banked, but got caught in the credit crunch, or business has gone bad for them, and they have land, but they don't have the money to build. And there's so many people like that, not just in the UK here, but different parts of the world. And crowdfunding can really be the answer to people like that, if the deal's good and it stacks up, obviously.
And they may have land with no planning or expired planning. So to get planning in place can be quite a small amount relative to the build phase. So you can raise a small amount. A deal I know of, they raised 40,000, 50 investors were in that deal. And it was just for planning.
So you're like taking the whole project and dividing it into phases?
Yes.
So doing a phase of the planning, and then the next step, right out through to full build out phase.
Correct.
Okay.
And you can offer different rates of return or different sort of rewards on each phase, depending on the risk profile, the appetite of the investors. Different investors want different things. So some investors who passed on that planning, I was talking to people running the project, they passed on that because they want to fund the build.
Okay.
So they're just in the wings waiting, but they love that it's an FCA approved process. They love that it's very out there, transparent, so that people know exactly what's going on.
And also some of your early investors, if it goes well for them in that planning stage, are more likely then to go the next stage.
Correct.
So you're creating the tribe that keeps coming back to be involved with you.
It's like having a lot of first dates. Your job at a first date is to get to the second date, which means have a short first date. Have a planning project or something that doesn't require a ton of money, simple to structure, very clean to explain to people. And if it goes well, then they're much more likely to be interested in the next phase.
Okay. So putting the other side of the hat on now. I'm now an investor.
Okay.
I've managed to save up a couple of £1,000 perhaps that I want to put somewhere that's going to be safe, but also give me a return. Why should I look at real estate crowdfunding?
So let me be a little bit blunt. The FCA wants to make this really clear. It is not safe. Your capital is at risk.
Okay.
So you're investing. There's some
Yeah.
risk and there's some reward. So people shouldn't think of crowdfunding as safe, but it can be quite reasonable to do, and it may be smart to do. So you're either investing because you have some savings you want to grow, maybe generation rent. You're a property investor with some capital and you don't want to do your own, you don't have enough for the next deal, or you don't want to do it yourself. Or you're actually a developer who's looking to raise money, but you need to figure out how this works. So you should invest a bit of money so you can talk to other investors later about, this is how you get in, this is exactly what I did. You want to speak from experience. Take a small pot of money, go to one of the crowdfunding sites or more than one, get registered, finish the KYC process, then know your customer, and then look at the individual deals. I would recommend you probably put a bit of money into more than one, because you can be trying out different fundraisers. You can also try different styles of deals. You can diversify the risk, which is increasing the safety, so that if there's an event, a plane crash or whatever, it doesn't affect your whole portfolio, it affects one project, but you funded a few projects. There can be some very attractive rates of return. I mean, we're talking very attractive. And
You give me some numbers.
Well,
I'm an investor. I want to know numbers.
so-
Roughly, I know, I appreciate there's
So,
a band, but you give me
8%
Yep.
to 80%.
80%.
8 to 80. Yes.
Okay, and what type of a deal would give you 8%, and what type of a deal may potentially give you 80%?
The 8% I was thinking of is a debt finance project where you're lending money and there's an 8% interest rate. The 80% was a deal that's closed and you couldn't invest in it now, and it actually has reached a positive outcome, and that was a planning opportunity. So just
Okay.
to temper this, that 80% was because you could lose 100% of your investment, or you get 80% projected return, again projected. So the key here is there's a diversity of deals. And as a new investor, or as a future fundraiser as a new investor, you're looking at the process, you're putting a bit of money in, you're getting warmed up to the individual platform, the individual fundraisers, how the projects work, do they communicate, do they say what they want to do and then deliver? They basically, they promised 10, they got me 11, I'm happy, or they promised 10, I got 9, I'm unhappy. You know,
Set
how does that
expectations.
Exactly.
Yeah.
And it's about good, effective communication. So get in there, put a little bit in, get started, lose your virginity, so to speak, as an investor in crowdfunding by doing some small transactions.
Yeah. So you mentioned KYC there and being registered on a platform. I think it's important to point out, obviously, because it's regulated, then there is a process in terms of the KYC and registration that involves being a sophisticated investor or high net worth individual prior to being able to invest in platforms.
So not exactly those two. KYC in particular starts with, are you who you say you are? So we want a government issued ID with a photo to verify that you are the person.
Yeah.
And, or if it's a company, there'll be some documentation for that. And where do you live, where are you from? The legislation, the restrictions, the regulations are very country centric. So that's the first part of KYC. Then the FCA, and there's other procedures for other countries, requires an understanding of, is the person restricted retail, high net worth, or sophisticated? And there's limits to what restricted retail investors can invest at any one time, and over an annual limit too. So that's part of how they present the information on the platform, is they need to know their customers, and they need to know who they are, where they are, what their background is, how much knowledge of experience and assets. They don't need to know perfectly, they just need to know which bucket to put you in. So they'll go through that process. Some of that won't kick in until you actually go to invest. Some of it is done quite early when you register.
What I find somewhat amusing is that there are those hoops and loops to jump through in terms of investing, say, £100 on a real estate crowdfunding site. But if I wanted to walk into a bookies in a town and I wanted to put £100 on a horse, there's no regulation.
There is regulation, but there's a whole
In what way?
regulations of the gambling regulations.
Yes, but in terms of any individual can take their
understand.
life savings
I understand.
and can throw it on a horse,
Yeah.
and yet if somebody who is educated in property investment wants to make an informed, in their eyes, an
Yep.
informed investment decision, all of a sudden the government feels they have to protect them.
Horses.
And I find that somewhat amusing in some ways.
Yeah.
It's like similar industry regarding buy-to-let property. Like I've bought and sold over 100 properties in the buy-to-let in the UK, and I remember a couple of years ago going to get a buy-to-let mortgage on a property that we had unencumbered, and the bank said no, you're too heavily into debt with your bank lending because there's so many mortgages. And I said, well, if I come in as a complete novice, I have no bank lending, I have no experience in buy-to-let, will you lend me the money? Of course we will. But this is my expertise, this is my job, I understand, property investment. So surely I'm way safer bet getting my 25th mortgage than I am you giving the first mortgage to a novice. But that's not the way the banking industry works or the regulation works.
So I worked in investment banks. I also worked in retail bank, egg, and some other experiences. So I think you're taking a particular view. And another way to hear that is you represent concentrated risk. That if you get a decision wrong, it might affect 25 loans rather than affecting just one. So your concentration of risk is higher. So your risk profile to that bank is not the same as the person with the first loan, because they can afford to eat that one. They can't afford to eat the 25. That's how they rate.
But okay, no, that's fair enough. But if they're still individual mortgages per se. But I hear what you're saying. But it's interesting the way regulation works, and obviously it has an impact on real estate crowdfunding.
A lot of it is for a good reason. Some of it is for legacy reasons that don't apply, and they just forgot to change the rules. Crowdfunding is new. It's this is why I like the FCA. They are trying something, and they're expecting it to evolve as the market evolves. The masses are learning about crowdfunding. It's sort of ramping up, and the more the masses understand it, the more the regulations can adapt to fix what that needs to be fixed and to avoid what doesn't need to be regulated. As you said, you mentioned £100. I know of a site where for a property deal you can put in £20. So you can get started for very small amounts. And if people are new to this, they should experiment with very small amounts. That's like a lunch or dinner, depending on where you live.
Yeah.
And this is an opportunity to learn for a very minor amount of money.
But they still need to be designated and have
Yes.
been authorised on that site
They would have
before
to go
they can even
through
spend £20.
That's correct.
Yeah.
Oh, yeah.
Yeah.
But it'll actually be a lighter weight touch. The AML is much less at £20 than it is for 200,000.
Bigger one, okay. So John, how do you see the real estate crowdfunding market evolving over this next, say, 2 to 5 years?
So in real estate in the UK, equity platforms are relatively new. Debt platforms have been around a little longer. So there's not a lot of history. There's some. There are a fair number of loans that have already been paid off, construction loans. We're just starting to see some of the equity deals close, finish, and money go back. So we're in the first year, the first 5 years, depending how you draw that line. People are learning. The investors are learning. The conversations are starting. The developers are starting to understand how to explain their deals. So I expect you'll see quite a change in how information is presented and the receptivity by the audience to fund deals. The other thing I expect to see, but I'm not sure when, is right now we have what is called a term mismatch. Most of the investors want to put money in shorter term. 12, 18 months is about as long as they want, maybe 2 years. That favors certain types of projects, certain types of structures. The buy-to-let sector, if it's a buy and hold for rent, there is not a lot of crowdfunding money right now that is active and focused on that, the 5-year or 10-year hold. That I think will evolve and change as more of the long-term savers get comfortable with how crowdfunding works.
Okay. So at masterclasscrowdfunding.com, we're big believers in education. We're trying to bring, if you like, the whole crowdfunding community together, create a collaborative hub. So just how important do you think education is to that sort of new marketplace?
It's almost the definition of a new marketplace. There's a rapid learning process. There are the thought leaders, then there are the other people who are trying to climb that ladder of knowledge as quickly as possible. It also is an area that evolves a lot. So Masterclass Crowdfunding is a great way for people to engage with others, to understand what's going on. Every 3, 6, 12 months, I expect some radical change. I'm not even sure which direction some will come from. So there's definitely a need to bring together sort of the knowledge base and disseminate it out, let it iterate, come back, update the content, do it again, so to speak. so that people can build on what they've already learned.
So, final question then. I'm someone looking at crowdfunding. Give me one tip that you would give to someone in my situation.
So first one, it's sort of like the tip zero, is just register for some crowdfunding sites that are focused on real estate. And you could use a debt site, you could use an equity site. I'd probably recommend more than one, so at least a debt and at least an equity, if not more than one. Go through the process, get ready, start to do the exercise. Click on the deals, look at the information, look at the deals that have already closed and already funded, look at the deals that didn't fund if there are any available to see. Figure out what you thought of that deal. There's no pressure to invest, so you can have a sort of unemotional review. Then look at the live deals. Are any of those worth investing in? Can you afford £100? Can you afford £500? Whatever the number is. This idea that you can invest to learn, and learn by investing, so you're doing it, you're not just reading about it, you're not up in the stands, you're on the pitch, you can see what the mud feels like, get in there, muck around, and do it with amounts of money you can afford to lose, literally. Because if you lose it,
that's important.
you'll still learn something,
Yeah.
but it's a small amount, and you can handle it. After you become more experienced, after you've done more deals, you can raise the amount you want to invest, because now you know something you've done, you've been around, you've done it a few times.
That was a good one sentence. But very good information.
I'm verbose.
Of course, but no, you have so much information and you have so much knowledge, and there aren't many people like you in the UK, to be fair, in the sense that you've got the experience in property of what you've done in so many years. You've had the financial background that you have in creative finance, and of course you're into crowdfunding, so that's a quite an unusual mix of experience that you're bringing to the table. So I know you do your events in London every month. So when's your next one? Is it coming up?
So propertyfortress.com, there's an events page, so propertyfortress.com/events, and you can find out information. We've been running the monthly meeting for 12 years now, second Tuesday of the month, every month.
And that's like a workshop scenario? People just come to hear about property investment?
It's not quite a workshop. There'll be someone presenting on a topic when it's meant to be educational. I definitely encourage interaction.
Yeah.
People know who go there that if you don't ask questions, I'll find a way to pull it out of you anyways. It's also meant to be a way for people to find each other in the room. So I'm pretty good at poking people and introducing people.
Networking event.
Forcing the networking so that people who have certain needs, it's like, well, there's someone in the room over there that can help with that. Because it's like a brain trust in the room. Why not tap into it?
Yeah, brilliant. Listen, absolute pleasure. Thank you for coming along. And I promise you I'll be coming to one of your events in London sometime in 2018.
Sooner the better.
That's a promise.